So technically speaking, guys, the markets as a whole could still rip a little bit higher to new all-time highs. Not technically this year. I mean, there's a lot of uncertainty with the economic environment and geopolitical events, right? To say that, all right, we're already in June, technically almost there, and that's it. Markets are going to be flat for the rest of the summer, and then come September, we rip higher into December, and then January all-time highs. I don't think that's the case. I think that we've already sort of scarred a lot of people, and the markets have given everybody the 1-2 punch, um, because that's just what markets do, right? They psychologically get to you whenever you see a little bit of a relief rally, right? And then it's just met with some selling and takes profits away. So just be patient with yourself. But anyway, back to what I was going to say to you guys. So technically speaking, yes, we could see the market head higher. No, for sure, no problem. Towards 550 in the SPY, 500. But on the flip side of that, we could also see the SPY having topped in January. So maybe it is, but what would that look like, right? What would that scenario be? I mean, what is the super cycle degree here? Is it super cycle degree one? Did we just enter a multi-year bear market? Okay. I'll start worrying about that if we start breaking south of 2020 highs. All right. If we start breaking south of 2020 highs, then I will start looking and exploring at this possibility. But for now, I'm not. And the reasons why is because, look, if we take quick fib projections, right? So obviously when you have an extended third wave, wave 1 and 5 will likely equal to one another. So in our case, right, from our credit crisis low, we're going to take an extension from the low of wave 1 to the high of wave 1, projected over to the low of wave 4, and you see that wave 5 has paired up to wave 1, right? Just overshot itself by a little bit. All right, so that's one of the reasons why maybe, just maybe, the top in this entire bull market since 2008 has already reached its course. All right, just keep that in mind for when we're doing these analysis. All right, so assuming that it is in the top, all right, let's dive into our technical analysis, which is using our preferred method of analysis. I repeated the word, my bad. The Elliott wave principle. But let's take a look at the daily time frame and let's dissect what's been happening. All right. Actually, we always start with that 1 hour time frame. So if you guys remember yesterday, right, I showed you guys this count. And I told you, right, that the bulls were getting trapped, and that this zone up here on the 408 was going to be resistance. We then met that resistance and sold off heavily yesterday, and now today was just a consolidation to that sell-off. Just like when we see a rip higher, we consolidate, right, to the next leg higher. This is the opposite, right? We made a new leg lower. We're going to correct that rally to the downside to then push on lower. So what does that wave count look like here? The target to the downside, all right, to sort of tie what the title of this video is, how much lower, we're going to take a projection, right? We're going to take from the low, here, we're going to do this easier, right? So we're going to do, how do we do this for you guys? So we're going to take an extension, all right? Oh, I don't know why I got lost there for a second. My bad, guys. So we're going to take an extension from the wave 1 to the 2 over here, and we're going to take equality, right? So the 100% extension gets us down towards the 365 region, right? So the wave 3 will be equal to the wave 1, and so far it's playing out to be that way, if you remember from our videos yesterday and the day before. So, but this wave count is not confirmed until we break south of 385.28, which is wave count confirmation. That'll be the break of south of wave 1. Now, technically speaking, we can still do the following, right? We can still do a 1, 2, and 3, and 4, and 5, right? But it's just not looking that way anymore, guys. I mean, we haven't made any attempts to continue pushing higher. In fact, we're just correcting the move and now pushing lower. Today's price action was just hopping around VWAP and then just going nowhere, to be honest with you. So going down into the 15-minute time frame, all right, so as you guys noted, and as I mentioned to you yesterday, Okay, we took a short trade, a short position over a trending wave. The link to the Discord group is pinned down in the comment section if you guys want to join. We took a short trade literally between this wave B and wave C into this rally, anticipating a move lower. All right, anticipating a move lower. If you guys want those type of trades, we execute them live in real time in the Discord group. So what I'm getting at here is that we have now potential evidence of 5 waves to the downside. All right, and they look like this. So we have the wave 1, right? Wave 2, wave 3. Actually, my bad. We have wave 1, 2, 3, 4, and 5. All right, that's our 5 waves to the downside. We're now trying to correct this entire rally in this fashion. So what would this look like? What would this be? The structure will be the wave 1, all right, to the downside. Wave 1, correction in the wave 2, okay, and so correction in the wave 2 comes in towards the 23.6. All right, 23.6 is some sort of a resistance area, all right, because that's a retracement from the high to the lows. All right, if I turn this retracement on again, you'll note that that's what I'm referring to. All right, to actually, I'm adjusting, and my apologies, guys. So A, B, and C perhaps into the wave 2 lower. All right, so these are targets of resistance that I'm looking for coming into tomorrow. 392 and 395, that zone I wanted to hold before we start seeing the next leg lower to break wave count and validation. Now I'm just going to, for argument's sake, turn on our bullish count, right, which calls for the May 12th to be the low, which is right over here, May 12th, just for argument's sake, because it's still technically valid from an Elliott wave standpoint, right? We haven't broken below the origin of wave 1. Is it an ideal scenario? No, not at all. We don't like this ABC, or even if it's over here, the A, B, and C is just way out of proportion. The right look, it's not met. The wave 2 is way too deep, a little bit beyond the 786 and close to invalidation. And as you can see clearly today, price action was not helping confirm this count. So for that reason, it is possible that we see another push lower. So just so you guys know, that's what I'm looking for. All right, and that's what potentially market participants are anticipating, that this was an area of accumulation for more downside to go in this market. All right, guys, so hopping over to the triple Qs or the NASDAQ, right? This is what I'm referring to. So our bearish count from the wave 1, right? ABC into the 2, and now we're looking for the third wave lower, right? So 1, 2, 3, 4, and 5. ABC into the 2. A little bit more clear of a price structure here in the triple Qs or the NASDAQ. Right, a little bit more clear here. However, we haven't broken south of 284.94, which confirms this count. It's gonna get there, but it's not at the moment, right? We haven't set it in stone just yet. So what we want to see is something like this, right? So obviously this will be the wave 1, ABC into the 2, and then we're gonna head lower into what is the wave 3. So now our downside target to the wave 3 is at 265.05 in the triple Qs. 265.05 will be an area of support that will let us know that this was the wave 3 completion, but obviously it doesn't get confirmed until we break south of 284. Actually, by the way, I wanted to show you guys the SPY, the bullish time frame. I'm sorry, just all over the place, guys. You guys know this market has everybody on their tippy toes. So the weekly time frame, or the daily time frame, is one that I wanted to get to you. So this is what I'm looking for in this time frame, right? In the daily time frame, we have we have more downside to go. All right, it's looking like it. I don't think that from here we start ripping a little bit higher based on the smaller time frames and how those wave structures are playing out, as I've been showing you here. So the way I'm looking at this in the SPY, we are seeing a potential ending diagonal in the wave 5. All right, and as you guys know, ending diagonals are made up of 3 waves in each subdivision, right? So wave 1 is 3 waves, wave 2 is 3 waves, 3, 3, and so on and so forth until we get to the final 5th wave, which somewhere here, maybe. For now, we are anticipating that wave 2. So this entire rally from the COVID lows towards our January 2020 highs can be viewed in 3 waves. It can, right? Because what we have here, right, is an actionary wave, a correction, and another actionary wave, all right? And now we have an ABC. So we have wave A, wave B, wave C, wave A, wave B, and wave C, all right? So 3 waves in wave 1, 3 waves in wave 2, and now we're going to have A, B, and C into the 3, A, B, C into the 4, A, B, C into the 5, all right? So, I mean, that's way into the future, which is going to focus on what's happening today. Downside targets 355, maybe the bottom in the SPY, maybe, and it's going to be just a little bit north of the COVID highs, right? I mean the pre-COVID highs, and I think this was February of 2020. So where do I get this from, right? The 38.2% retracement and the 1618. These two levels of confluence plus the high of wave A here is giving us a little bit of evidence that this is going to be the case. That might be the case, to be honest with you. All right. So we take a retracement tool from the low to the high, we get the 38.2%, right? That's an appropriate level for a wave 2 to come back to, right? It's always between the 23, 38, and the 50%. 618 is a little deep. 786 is just not likely, like we've been seeing in the smaller time frames. So AB down in C. So the 1618 is an extension from the wave A and B to give us equality of wave C to wave A. So wave A will be equals to the wave C, right, in the zigzag. And that's what we're trying to display. That's what our goal is going to be here. If that's the case, we've already reached the 100% extension. But because of the evidence that we have in the smaller time frames and the smaller wave counts, it is likely that we're going to see further downside. Okay, so just keep that in mind. So for now, we're going to operate under the count that suggests more downside to go when we break south of 385 in the SPY. Okay, guys, simple as that. Simple as that. I know that a lot of people have been stressed out. If I may take 5 minutes from your time and just listen to this, friend, it's not going to be 5 minutes, probably just one. I know a lot of people have been stressed out with this market. Market has been tremendously difficult. All right, but here is another opportunity to take advantage of more upside in the long run, right? 5-10 years down the line, if you start building positions and stop trying to catch little trades here and there to give you or to try to make up everything that you've been drawn down to, right? It ain't gonna work, right? You volatility, implied volatility on these options have been tremendously crushed. I mean, you have no idea at this point. It's just, it makes more sense to play with shares rather than options. Options is not working at the moment. All right, if you guys know and trade options, you'll know what I'm talking about. Anyway, so I wish you the best of luck. All right, please be patient. Markets, it's not a bad idea to dip in little by little into your favorite names, right? Into value stocks, into names that are going to be here in the long run. All right, you know, Apple is at a big discount. Netflix is at a big discount. JP Morgan Chase at a big discount, you know, stuff like that. All right, Ford, just throwing out names. This is not a recommendation. This is just throwing out names. All right, growth stocks just been demolished. Anyway, so that's it for me tonight. I hope everything was okay with you all. And let me know if you guys have any questions. Leave your comments down leave your questions down in the comment section. As always, thank you so much. Give it a thumbs up. See you guys tomorrow. Take care.